everybody's going to get a notification and they'll just start joining as they come in. We
Okay.
also, interestingly, actually, okay. Anyway, Price, I want to say thank you for coming today. I'm going to go ahead and start out with a legal disclaimer, and then I'm going to talk a little bit about kind of like our history. And also, we always, as a bit of a tradition in the forum, we start with a dad joke. So I'm going to start with the dad joke so you can kind of think about an answer maybe. And if you don't have one, that's totally fine. But the joke for today is going to be, why did Han Solo not like his steak? Are you a Star Wars fan?
Oh yeah, absolutely.
Okay. So why do you think Han Solo wouldn't like his steak?
I have a guess.
Okay, cool. All right. Let me read this disclaimer. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell any securities, but rather guidelines to interpreting using specific indicators of features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading securities. MetaStock, the Traders Forum LLC, and their employees disclaim liability for the investment decisions by investors based on the use of the software, any trading strategies, or any information provided in connection with the companies. MetaStock, Traders Forum LLC, and their employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation should be construed as investment advice or solicitation to buy a security. So there you go. You said you had a guess. So the joke, I know that we've had a few people join. The joke is, why did Han Solo from Star Wars not like his steak? And
So
Price says he has a guess.
Throw out an answer here.
If you want, yeah. Or I can just tell you the answer.
Because it was too chewy.
Have I told you that one before? Because that's
I was just thinking of Chewbacca, so it's got to be related to Chewbacca. Chewy, as they say, right?
Yeah, for sure.
Nice.
So, all right. Thanks for watching. If you're watching on YouTube and you're not part of the community, I'd encourage you to join our community. It's free. You can chat with other traders. We have lessons about the markets. The whole idea is to kind of share ideas. And that you can find that at thetradersforum.com. So, and Price, as we get started, where can people find you?
They can find me at bigtrends.com. So on our 25th anniversary year. So blessed to have served so many over these last 2.5 decades. And thank you, Jeff, for being a big part of that with the Big Trends toolkit there in MetaStock. We love that toolkit. I love how you're popping that up with the SPY right in front of us here.
Yeah. Let me talk a little bit about you first. And then
okay.
Yeah. So Price, literally Price Headley is the first company I got when I took on. I initially started here at MetaStock. Gosh, it's been 26 years now. But for 16 of those years, I've been in charge of kind of like our partners. And Price was somebody I was aware of in the industry. I think I'd heard him speak. I knew he had a book, that kind of stuff. And I just reached out to him. And at that time, do you still do Timer Digest? Is that still a thing that exists?
We're not actively doing it just because we're so busy with our own stuff. But Jim Schmidt of Timer Digest, a great guy and great organization tracking a lot of different timers out there. But we just kind of put so much into our own stuff that we kind of didn't have time for that. But yeah, that's a great organization too.
Yeah. So Timer Digest is somebody that you'd submit your trades to, and then they would rank the best pickers. And Price came up on that list. I don't know. I don't remember the amount of times, but a lot of times. He's somebody that, like literally, I learned a lot from, both in terms of like coding, because I learned how to code an add-on to make his actually, but also like just his mentality and kind of the approach to the market and all that kind of stuff I really liked. So that's my introduction to you, Price.
Well, thank you, Jeff. And yeah, it's been a great working relationship and over several iterations of additional features we keep adding into the Big Trends toolkit there in MetaStock, including what you have up here with the Big Trend score, which I love seeing kind of how everything kind of joins together. You might have a lot of different indicators, folks, so you look at individually, but it's nice when you can kind of come up with a composite score. So that's what Jeff has pulled up here is kind of an S&P composite trend score, which for our Big Trend score right now is actually not nearly as compelling as it was back in May, June, and the first part of July, with a much better trending phase with those stronger readings up there in the 80 to 90 percentile. Whereas now, Jeff shows you, we've got about 40% of the indicators leaning bullish, obviously, but still not convincingly so. Obviously, right on the heels of the Federal Reserve's 50 basis point cut yesterday afternoon. That was expected. It was about a 60-40 chance that they were going to do a 50 basis point cut rather than 25. I believe, Jeff, that the market just essentially forced the Fed's hand. The bond market, in addition to looking at the SPY here, the bond market, TLT, basically has been rallying for a while now and basically saying the Fed needs to do something more dramatic because they had missed that last chance to do a quarter point in their prior meeting. Look at that. You talk about a better looking chart. I think the bond market looks better looking than the S&P 500 right now. It's just cranking away, steady, kind of a nice little pause after that big shot up on the early August stock market sell off. We paused for most of August and then now really launching again. So I think you have to look at every chart in context, right, of what the other charts are telling you and kind of looking for relative better opportunities, whether you're getting bullish or getting bearish, or we like to do a little bit of both, right? Have some bull bets and some bearish bets to stay relatively hedged, not get too long or too short and too high or too low, in essence, kind of balance out some of that optimism with some other hedged bets on the downside. So, but right now, obviously the bias is to the upside because the Fed is starting off that easing cycle. And so that should help the markets, even if we have to get through a seasonally weak period here in the next several weeks. I think by the October earnings, mid-October, when the third quarter earnings reports start coming in from the banks and everybody else, I think you'll see a pretty good all clear into the end of the year and into early next year to the upside for equities. But it's really driven by this great looking bond chart on the TLT here.
All right, cool. Can you tell me, just to kind of get some background from you, what do you think is what initially got you into trading?
Yeah, I pretty much got into trading while I was a student at Duke University. So I actually did this was right after the crash of '87. I was a junior, and basically was really getting interested in the stock market and learning about it from the crash. And got into a collegiate investment challenge, the AT&T Collegiate Investment Challenge, with about 14,000 other students. It was paper money, of course, but really, I took the Warren Buffett approach. Jeff bought Gillette, Procter & Gamble, Coke right after the crash, thinking, hey, you can't go wrong buying quality companies. And in the long term, that was true, right? It's kind of the Warren Buffett mentality. But you know what? It was a 4-month contest. So, and after 3 months, I got my statement. I was in the bottom 25% of all participants. And so I said, it's not working. I've got a month left. Time to do something different. I'd been reading the journal. This was before computers for me. So basically late 80s. So I was just reading the journal, noticing this pattern that there was a lot of takeover hype. And a lot of these stocks would get talked up and then they'd get spiked right back down. At least part of that would spike down on the lack of any news on the takeover. So I started scalping, day trading my account in these hyped up takeovers, day trading them back down for the day, and went from the bottom quartile to the top 1% in that final month of February of 1988. I remember it well because they sent me a letter saying they hadn't seen such a big comeback. And I said, I think my grades were going like this while my portfolio was going like this. It was one of those kind of things where, I was just really engaged with it. And I was like calling their broker. It was like a paper trade thing. So I was calling. And so anyway, I knew at that point I had the passion, I had the interest, I had the desire to really dig into the markets, to read about it all the time. And just that constant state of learning, to the point where then when I started out in 1990 after graduating from Duke and started in Cincinnati at what was the nation's largest options newsletter company at the time, and was there for most of the 90s, that basically my wife was like, I was reading trading books every night outside of work. And she's like, you need a hobby. You need to do something else, besides just this all encompassing work and after work drive to learn, just absorb information like a sponge. And I still really, here we are now 35 years since then. I still think that education is the number one thing that every trader and investor has to constantly be seeking to up their game on, learning about whether it's new technologies, new strategies, new approaches for all different kinds of time frames. It's just, you always want to stay sharp. You always want to feel like, to use the Lee Iacocca quote, former head of Chrysler, that, you know, you want to be green and growing, not ripe and rotting. You know, so the idea that you want to think you've got to figure it out. As soon as you think you've got to figure it out in the markets, usually you've got a rude awakening coming. It's kind of like that flying too close to the sun story of, you know, you're going to get burned and come crashing back down. You don't want to get too high or low. You don't want to get too concentrated, too heavy on any idea, no matter how right you think you will be. There's just been too many of the best and brightest on Wall Street that have blown themselves up from overly concentrated positions and bets. So anyway, but that's the long answer to how I got interested in the markets, found my passion there, and really have never lost that passion to always want to be learning and always want to be picking up new ideas, new strategies, new information, and even tweaking stuff that I'm currently doing to just further optimize it.
Was your answer to your wife, "This is my hobby"?
Yeah. My answer was, I can't believe I get paid to do this, right? Basically, you know, and ironically, you know, when I was in the 90s, I was kind of forced into a public speaking role from another person who had left the company, and they're like, "Hey, you're going to go to Las Vegas in 2 days and present in a couple of sessions." And I was petrified. I was like, I've never presented. I was more of the bookish type, just happy to be behind the scenes. And you know, that first one that I did, you know, I was like, well, what am I speaking about? Like, whatever you want, you just make it up. And I was like, hold on, there's no structure to this, no nothing. And so I had all these notes, and I was nervous, and I was, you know, looked behind the podium, looking up, and it was a disaster of a first presentation, in my opinion. It probably wasn't as bad as I thought it was. But the next day I had the same presentation, and I said, I'm scrapping the looking down, looking up, looking down, looking up, all that. And I'm just going to just have 5 key points in an hour that I want to talk about for 10 minutes, 12 minutes apiece, and just really simplify. And I got out away from the podium, walked amongst the audience, had fun talking about the markets. And that was my aha moment on the speaking side was, you know, use what's up here more than what's like on a piece of paper and being rigid and rote, and just really talking about what's happening, what's worked, what hasn't. Everybody can relate, whether you're a newer trader, an investor, or whether you've traded for decades. You can relate to the internal game, the psychology, the things that we have to do to keep our mindset right, so that we don't get ourselves upside down, so we don't get ego driving our trading decisions. We look at a rational, hopefully system-based approach like what you have via MetaStock to really guide us through the invariable ups and downs of every market, right? So that's really the core, is just kind of talking to those experiences that I think we all have had at different levels, and looking to make better decisions in the heat of battle.
I could certainly relate to your first story about your first presentation. Mine was, I did a presentation. My very first one was at one of the John Bollinger classes.
Nice.
And I used that podium as a shield.
Oh, exactly. That's kind of what most people do. It separates you from your audience, from your people you're talking with, right? So,
For
so
sure.
I got away from that real quick.
I wanted to ask you, because like one of the things that I really like about kind of the work that you've done over the years is you always like to talk about how there's so many opportunities in the markets with all the optionable stocks. There's like 5,500 of them nowadays.
Right.
Your mentality has always been, okay, well, how can I focus on the best opportunities? And
exactly.
I wanted to ask you, can you identify where that comes from in terms of kind of when was it actually that experience in college where you went from the bottom quartile to the top percent, or was it something else that kind of what kind of gave you that mentality around it?
I think it's from experience, right? The more experience you have, the more you learn. Like, well, hey, I made 20% on this investment. That feels okay. It feels pretty solid. And then you see, well, look, there was something else that was making well over that. You know, it's seeing those opportunity costs, those opportunities lost on a relative basis, where you start to say, okay, where's my money going to be best utilized to, I mean, obviously it doesn't mean you should go into the highest risk, highest reward investment necessarily, because you got to factor risk as well as reward, but that you see like in a bigger picture sense, okay, if I can spread myself out across the best of the best signals with a variety of different investments, then that system gets the chance to really let the probabilities play out. What most people forget and miss is that, if you're playing a positive edge game, a game where you expect to win over time, you should not be outsizing your positions. You should not be going with heavier concentrations. You should be getting a lot more, basically, chances at the plate to let that edge play out, right? So most people are so used to the Vegas mentality of, well, I don't have an edge, so I better go big and then go home, or go big, make it, and then go home. Whether you make it or lose it in a negative edge, you're like, okay, play less often, play bigger, and hope you get lucky, and then get on out of there. But of course, most people don't play Vegas that way. They stay way too long at the tables, and then that's why
Even
they
if they
have.
win, they stay.
Yeah, that's why Vegas has those little incentives to, use your card so you can get some extra points, and because the longer we have you at the table, the more we know that we're going to get our money out of you, right? So that's what you have to realize, is that that's why Vegas does those things, to try to incentivize you to stay at the table. It's the opposite when you have a positive edge in the markets, right? It's not gambling if you have a positive edge. It's investing, and it's playing out that probabilistic advantage across a large sample of trades. So I would rather take 1% of my portfolio into 100 different stock names that if I have 100 names that check the boxes, than have, 10% names, even though you think about like a name like Apple or Nvidia, which of course they can grow to be a bigger part of and will grow to be a bigger part of your portfolio. It's kind of that 80-20 rule, that the top 20% of your ideas are probably going to generate 80% of your results, of your profits. That's okay. That doesn't bother me to see a position grow to be a bigger allocation in the portfolio so much, but it's the start off of taking too much risk and then ending up paying a price for it. And it's not just the price we pay in our actual investment portfolio, in the profit or the loss that accrues from too big of a position that didn't work out. I think it's what it does to you psychologically. It damages you psychologically. So just like you have to protect your investment capital, I believe you have to protect your psychological capital to make sure that you maintain your conviction, maintain your ability to execute through uncertainty, in order to ultimately keep, finding those edges and taking advantage of them, rather than getting a loss of confidence and then stuck on the sidelines saying, I'm back to the drawing board. And meanwhile, again, opportunities are going by that you're missing because you've lost that confidence and you're not executing anymore.
I like that as an idea. Do you have a maximum number of positions you'll be in at a time, or does it just?
It depends on the portfolio. So like when I mentioned the 1%, I have a stock portfolio called Stock Doublers Plus that, our Big Trend subscribers can get. And basically what we tell people is 1%, you could theoretically have 100 names. You probably won't. You might have, right now, I think we have like maybe 45 names. So we're like theoretically only half invested and half in cash in that portfolio. But yet that portfolio is still outperformed because it's had Nvidia, because it's had Apple, because it's had Microsoft. It's had those kind of names, and it has a variety of tech, in addition to a variety of other names that I think are well positioned to benefit. And you mentioned before, like, how do I find the best of the best? Well, that's a scan that's driven to find names that are moving much bigger than you or I would usually expect them to move, right? So I once had a lady at an investment seminar I did, who I was showing an example with Taser back in the early 2000s. And she came up to me, and I was talking about how much we had made on Taser and how good it was working. It's now actually AXON, actually, Jeff. AXON.
Okay.
AXON is they changed the symbol. Okay.
It's been a minute since I've looked at it.
Yeah, right. So, and you might want to even look at a super longer term chart, like even
I'll load it
even a monthly or whatever.
Yeah,
but basically, I mean, it's still rolling, right? But the point is that, you see the monthly, it's just insane. And so And so, and they I guess renamed it, so you kind of don't get those early 2000s
Yeah.
maybe that you would have gotten because they renamed it. But it's still done pretty well since they renamed it too. But the
Oh
point
yeah.
is that but the point is that this lady came up to me and said, I didn't buy Taser because it was too far above its key moving averages. And I thought, isn't that an interesting belief system? I wonder if that belief system is helpful or harmful. And we all think, oh, if it's too far above its moving averages, of course you shouldn't buy it. Actually, my research showed that the ones that are too far above the moving averages are the ones that you want to be on because they're too far above there for a reason. The institutions, who we all know are driving the markets, not you and me as individuals, the institutions are pouring on the gas into the NVIDIAs, into the Apples, and keeping them way above their moving averages. Same thing happened with Microsoft in the 90s and more recently. Is that basically those, I call it stocks going into orbit, right? You want to be on
Mhm.
the rocket ship when it goes into orbit and then keep on riding that thing while it's in orbit. You don't want to be on that when it's crashing back out of orbit, crashing back to the sea, right? You want to be on it while it's continuing to coast higher. And when it comes back out of that orbit, you want to be off of it and moving on to something else. So I've got some things that we teach our stock doublers folks about that. It's like, okay, it's a longer term system. It's not a trading system. It's basically just an accelerated investing, accelerated growth system for basically longer term investment in the right names that you can keep on letting run month after month and hopefully year after year. I mean, some of our best holdings have been held for 8 to 10 years, and that can turn into 20, 50, the occasional 100 bagger like NVIDIA. So the point is that pop up NVDA on there while we're talking about that.
For
Because I mean,
sure. Yeah.
obviously, I'm not saying to buy NVIDIA now. Part of it too in that system is it looks for where you not only buy, but also where do you raise your stop? Where do you move, up, or what do you consider what I call a retest? Where do you get a re-entry? And Nvidia gave one of those re-entries in late 2022, right near the beginning of 23, where it had popped back down on a split adjusted basis to about $10 back at the start of 23. Right, we all know now that AI has been the hottest trend over the last year and almost 2 years, right? A year and a half, 2 years. And there's the bottom in late 22. And then as it ground back up from that teens area, hit the high of 140. So it was basically a 10 bagger from the late 22 to the recent top in June of 24. So, but then you see in the meantime, there's been plenty of shorter term buy signals there as well. And you see everybody's talking it up now. We're not on a buy signal now. So we're not messing with it currently from a shorter term perspective, even if we're still holding it in our longer term stock doublers portfolio. It's just a kind of a mandated, well, you only get out of it when it finally violates. It's a long way from violating that. And so sometimes what you have happen, Jeff, is you have stocks that okay, we don't like it and don't hate it either. It's just kind of in a no man's land right now in between
Yeah,
those
for sure.
bands. But the idea is that sometimes you got to just have the patience on a longer term system. Just let it keep riding if it indeed is not violating any of the exit stop parameters. So that's a big part of it too. Is determining what type of a time frame trader or investor you are for what part of your portfolio. You can be both. You just have to be clear about, okay, for this pot of money, I'm going to trade it. For this other pot of money, I'm going to get some more growth oriented investing. And really, that's my philosophy is that, yeah, even in my late 50s, I'm basically of that mindset. Like, I still want to have a growth mindset in my overall portfolio because there's just too much opportunity over the next decade to 2 decades to go into a heavy income mentality, right? The opportunity loss there is just too high for me.
Let me let me jump back a little bit. You had talked a little bit at the very start about seasonalities, and the fact that up until the end of October might be a little bit of a tough time seasonally for the market. The first question I have around that is how much do seasonals play into your day-to-day trading?
Yeah, I mean, I would say I'm aware of it, but at the same time, I'm not. If I have a system signal that says you should buy something and I'm worried about the seasonality, I'm still buying that. It just might affect my overall allocation of, how much capital overall do I want to be deployed versus how much of a cash cushion. So I kind of look at that as more of kind of like I'm not going to try to be 100% invested all the time, if ever, and especially in an options portfolio. We can get plenty of leverage to get to a more effective, more than 100% invested effective exposure, even with only a small part of the money at work, that based on what leverage ratios we might choose, right? So I'd rather, as you allude to, trading the biggest trends and leave the little fish and the little trends behind. I'd also rather make sure that we're, really in the best, what the system says are the best names to trade. So like, we just today we're getting like very short-term signals on like Apple and AMD as a couple names that were popping just in the very short-term charts. AMD on the daily chart's not going to look that great, but it's one of those that our hourly chart system was saying it should be buy, right? So like you change, the great things, you've got it all there on the time frames, right?
Yeah.
So the hourly was breaking out there the other day, and you can see it's one that had a nice little run there. And I think as we clear through that, could get another run. And then Apple, of course, is going to be really interesting at AAPL, because you've got the iPhone 16 launch. And initially at the start of the week, everybody said, oh, that's not good. There's the daily, right? Everybody got negative there on it. But basically, the system is going to be really interesting to see, okay, what happens from here on this whole, 16 is. There was some news this morning that said that it might be better than the prior negative news was, right? So there's going to be a lot of news flow about that 16 launch, for better or for worse, and so you want to be paying attention. Obviously, on those kind of time frames, it doesn't really check the boxes yet compared to what it was doing back in the spring and early summer. But I'm just saying, we look at a lot of different time frames for a lot of different types of traders, and so for our more active swing traders, we're going to get, even when the daily charts mix like that, we're going to get some opportunities to hop in, hop out over a 2 or 3 day span, and again, seek to take advantage of an edge on a different time frame. So it's all about finding those edges and then just continuing to execute, and never getting too high or too low when it works or when it doesn't. Just saying, I'm following the system. If you can follow your system, you're going to have so much more confidence in your ability to execute going forward. And so what I always tell people is, whatever your system is, okay, even before you put capital behind it, just practice taking the signals 10 in a row, then 20 in a row, then 30 in a row. Then after doing it for about 30 in a row, you can put a little bit of money behind it and say, now do it for another 10 in a row, 20 in a row, 30 in a row, without any errors in execution. If you can do that, then you can start to build up your allocations if you're gaining confidence in your method. But you have to trust yourself first in your ability to execute under uncertainty, especially on the way out. It's easy to get in. It's always harder to get out. So we don't want to be in any roach motels where there's the old raid ads where they're like, yeah, they check in, but they can't check out. We want to make sure in every trade that we've got a clear exit plan and that we follow it for better or for worse. In terms of result, it's like, grade yourself on that you followed the system. Even if you lost money, if you followed the system, then you're going to build more confidence that I can do that going forward, and build more trust and confidence in yourself.
Do you personally? You've talked a lot about different time frames. Do you have a go-to time frame that you prefer for your own trading?
I mean, it's just, again, it goes back to which time frame for which system.
Okay.
Like, so for investing, I'm using a monthly chart on investing, but for trading, we're in either a daily chart time frame or an hourly chart time frame these days. So I'm not messing with 15-minute or 5-minute or 1-minute charts. To me, the noise levels are just too high. I mean, like, if you looked at the action just yesterday on the SPY, Jeff, like if you just pulled up a really short-term chart, that'd be a good example of it. Pull up a 5 or even a 15-minute, whatever, a 5-minute ought to really show you the volatility, right? Is that you see like all that action that was happening yesterday around the Fed and around, that we see, big ups, big downs, and a lot of potential fake outs. And it's those fake outs that mess with my confidence in my system compared to the true breakout. Obviously, it looks like we got a nice little breakout going on the beginning of that chart. But the point is that if you're not careful about or on the end of that chart, if you're not careful, you will get yourself whipsawed, and you'll end up basically not trusting yourself or your next signal. So as soon as you're like doubting the signal, that I don't know if I can take that one or not, you're already done. You've got to be clear that whatever time frame, whatever signal you're using, you trust it to say I can execute each new signal that comes out. And also, that's the danger of fundamentals and news, right? Is that you'll see moves that'll happen that seem to be the exact opposite of what the news said. The earnings looked good and the stock's going down, or the earnings looked bad, the stock's going up. So that's where, I always tend to trust the chart and what the chart reaction to the news tells us more than the news itself. So be careful about using news as a justification to do something if the chart's telling you the opposite. I'd prefer to follow what the money flow is telling me in the chart and the technical side over just the fundamental data or news itself.
Do you have any idea how many indicators and methods you've created over the years?
Oh gosh, I would say there's been a lot that have been created. I would say there's only been probably a handful that have stood the test of time to this day, 25 years since launching Big Trends. I mean, I launched Big Trends off of a concept called acceleration bands. I still use acceleration bands. It's what helped me to grow my portfolio, to launch the company. But there was a time where it got real whippy and real noisy. So we put a couple of little tweaks into it to help, after we went through some choppier phases, right? So you've got it. So when, you overlay some things, and that's where like the Big Trend score overlays up to about what, maybe 5 or 6 key indicators and techniques. And then a couple of them are sort of repeated to get to essentially total of 10 factors that give you that then score from plus 100 to minus 100 on that top tier chart. But again, I trust a lot more in the longer term time frames than the shorter term time frames. So keep that in mind, that, as you look at tools like that on a 5-minute chart, I'm going to be a lot more careful about really believing that it's got that
I'm just going
staying
to go
power.
higher.
Yeah, right. So daily, weekly, exactly. And the beauty is it's all right there for you. It's in, you see the green phases where it's particularly good. I love how you coded that in on that bottom piece there, where you can really see green or red, really good or really bad. So like the other big one to watch is going to be gold, right? I mean, GLD, if you look at gold, it's up again today. It's the Fed it's like we're getting the declaration of victory over inflation here by the Fed going 50 basis points. And to me, I think even when there was some worry about that or saying that inflation was coming down, it's like gold hasn't come down. So that tells you the market assessment of inflation is that it's still going to be with us. And I think, if you look at the two primary presidential candidates in the election in early November, if you're using that as a big worry, I think Wall Street's not worried in a relative sense about either one, because what they do know is that both of those candidates, whichever one becomes president, both of them will spend money freely, and they will not put the reins on things. They will continue to spend. So you can bet that our deficits are not going to get under control, and you can bet that the government's going to keep printing money, and you can bet that gold is going to be an area that you need to get some exposure to along the way, or continue to maintain exposure as a
hedge.
maintain a hedge and a purchasing power, right? Keep your purchasing power relatively intact, even while our actual dollars are getting eroded by the greater and greater deficits in money printing. So that's just another one to watch and pay careful attention to over time. But so far, that gold market's telling us that inflation's not dead. It's likely to stay with us.
Do you remember the first stock you bought?
Gosh, I mean, it might be Coke.
Mine was Taser, actually.
It might be Coca-Cola. It might be McDonald's. Those couple of just really like go-to. I think I was a little too active of a McDonald's user in the early days, and even Coca-Cola user. I've reined that in, thankfully, comparatively for just my we gotta always look at what's working, what's not on our weight management, but yet they continue to do great, and so it's one of those that they've been two of the biggest and the best. And you look at some of those other long-term winners like a Walmart, like a Home Depot. Like the one lesson I learned when I really got started out of graduating from Duke and then basically getting into the markets, the one that I missed in my early days was Microsoft. I got on it later in the 90s, but I missed it in the early 90s because I thought it was quote unquote too overpriced, that it was too high of a PE ratio, price to earnings ratio. And that was something that, again, I would say you got to be careful about. NVIDIA, for example, everybody said, oh, it's starting to justify its PE ratio now, but even Apple, like Apple was a 10 PE ratio a decade and a half ago. Now it's like a 35 PE ratio, right? It's gone up tremendously. And again, I'm not saying that PE ratios don't matter, but I'm saying that be careful about it holding you off from trading something. If you think, hey, there's a window of opportunity here, I can take advantage of it, and not get hung up on maybe some longer term fundamental measure that might cost me opportunity. So again, it's valuations matter, but at the same time, there are going to be phases where you can ride even an expensive stock to getting more and more expensive. So again, that's where the technicals really drive the train first and foremost for me.
Would you say that you prefer options as the vehicle when you're trading stocks?
Mostly, yes. I mean, because even if you have a longer term view, you can use what's called a leaps option, which is a longer term option. It can be up to 3 years long as an option to control that stock. But yeah, basically, yeah. Why would I buy a stock if I'm only if my hourly chart says I'll be in this trade for max of 3 days? Then we'll look at the shorter term options. They are now weekly options that might, I won't necessarily buy this Friday's expiration, but I might buy next Friday's expiration today and be in and out in just a few trading days well before the expiration would hit. So it's kind of time adjusting your time frame and your option choice relative to your expected holding period for whatever your system or method is.
Do you prefer when you're buying options to look for a specific delta or specific in the moneyness?
I started off when big trends really being in the money options buyer. That's what I was doing with my own portfolio, because I was like making sure that I wasn't going to be risking, when I was launching the company, risking too much drawdown. But what's happened with us is we've seen actually some of the out of the money options give you the best bang for your buck profile if you catch the trends correctly. If you don't, we've got time stops that we'll use to get out relatively quickly if something's not basically justifying itself for being held. So we won't hold something that's not moving for too long. It needs to start moving if you're going to buy at or out of the money options. And so we have some more aggressive growth portfolios, like our Grand Slam and home run portfolios, that are geared to that type of more aggressive out of the money option buying, and not being so afraid of that if you're getting the trend right. Because what we'll do is we'll start peeling off parts of a position. We love creating what we call the free trade, whether you sell half your position at a double, or now we have one that sells 2/3 of the position at a 50% gain and gets all your risk capital back into your account. And then you can really free trade and free roll the rest of the position much more aggressively. It creates a lot more patience, a lot more ability to say, hey, even if the other part went to nothing, you can't lose on that trade if you've gotten your risk capital out in the first piece or pieces. So to me, that's a great way to trade, to give yourself a lot more staying power for the really big winners on the rest of your position, what we call the runner on the rest.
What is your, do you have a favorite indicator? Is there an indicator you wouldn't be able to trade without?
Oh gosh, I mean, we look at like a panel of things, whether it comes down to, like I mentioned, the bands, like acceleration bands. I look at ADX a lot, the average directional movement. I look at the CCI commodity channel index along with the Williams percent R. So those kind of core ones there are probably what make up the key elements of the tool. The
These ones?
toolkit, yeah, exactly. So you've got and you mentioned Bollinger earlier. There's Bollinger bands in there as well. But basically you got percent in there, R in there twice. Larry Williams percent range indicator. I have the efficiency ratio, which I'd coded off of a talk I heard Perry Kaufman giving him credit for kind of the concept of trend efficiency. So there's a lot of pieces in there. Of course, moving averages, general trend stuff. But yeah, those kind of core pieces are the ones that really are the technical and trend definers, right? So when you get not just a small trend, but then we get the trend really heating up to get those great trend score readings, that's where you can see really fast directional movement in relatively short periods of time. That's where you can get a lot of bang for your buck real quickly in options, especially.
This is an interesting question for me, because for me, if I wanted to talk about people that I view as somebody I've learned a lot from, mentors, if you would, you'd be very close to the top of that list. So, from
Thank
the
you.
perspective of you, is there anybody that really stands out as people you learned a lot from?
Yeah, I mean, I've learned a lot from a variety of sources. I would say from the option side, certainly my first mentor, Bernie Schaefer, as well as Larry McMillan, would be two of the sort of original options gurus that I would say was blessed to be able to interact with both of them a lot. From the trend side, I've been able to interact, like you mentioned, John Bollinger. He was kind of the inspiration for the band concept that led me to my acceleration band. So John Bollinger, an inspiration, as well as being able to meet and talk with a lot of my technical analysis heroes like John Murphy, just so many. Larry Williams, we mentioned. I mean, Larry and I have been on Fox News together a couple of times, and he's an innovator, right? So and that's where, Jake Bernstein, I think I saw his name earlier in this live stream. I mean, just a lot of these innovators who have been around, who have been through so many different cycles, so many different types of markets, so many different types of stock moves up and down and futures moves up and down, whatever you trade. That it's like, what you learn from that is that you've got to have a method to the madness. You've got to have a system. You've got to have something that allows you to take what seems like chaos at times and turns that chaos into order, turns it into something that you can then say, I see that pattern. I've traded that pattern. I know what those good ones look like. I know what the not good ones look like. I know how I will respond, whether it goes my way or goes against me. How will I manage the trade, right? So when you have that kind of confidence, and again, learn that through watching a lot of others that have been through this before, that's where that mentor and guide can really be a big help to kind of say, okay, yeah, there's others that came before me that have done this well. And there's others that have had big names that didn't last through some of the really market panics or shakeouts too. So it's a good reminder too about like making sure you stay in the game for the long haul and don't get shaken out by taking too bold or big of a bet on something, no matter what your conviction might be.
Cool. Yeah, talking about staying in the game, you do see a lot of traders that come in and a lot of them that go out. If I'm a brand new trader, what is the biggest piece of advice you'd have for me?
Oh, great question. I would say it has to start with education, like really diving deep on the education. Everybody wants to trade. Everybody wants to get in the game. You see the dollar signs and stars in your eyes of the potential that money you can be making. Wish I was on that one. Wish I was on this one. But I would say really start and look at, I'm going to not rush into the markets. I'm going to rather rush into education, diving deep on learning as much as I can about indicators, about methods, about what a good trend looks like, about what a good move then can be properly leveraged, about money management, capital allocation, and even the books about trading psychology. Really kind of diving deep into the education side first, and probably in the right spot here and elsewhere to be, soaking up as much as you can about, hey, what's worked, what hasn't, and then really from there, when you do get real money on the line, it's better to have real money ultimately on the line than paper money, because of course, real money, you get the emotional experience at a deeper level, the lessons learned on when it worked and when it didn't, with real money compared to paper money even more. It just makes more of an impact. But start small. The beauty of trading and investing is it's scalable, right? Once you have a proof of concept that you're like, okay, I've done this over so many samples and so many examples that now I can start to gradually scale up my exposure a bit more and a bit more. Never go too heavy of a jump all at once on your capital allocations. Just really kind of slow and steady wins the race on those capital allocations, as well as on the just general plan to say, want to be in the game for the long haul. Don't want to have the quick blowout, right? Don't want the blowout of not just financial, but don't want the psychological blowout where I feel like I'm back to the drawing board and everything else is in the trash again, kind of a thing. So kind of just looking at it as a long-term game, a long-term plan, and that you've got plenty of time to keep on learning, keep on growing as you're kind of formulating your own trading plan and strategy.
All right. Earlier, you talked about how your wife told you needed to get a hobby. What do you do? What do you do to kind of unwind? What's some of the things that you do as a hobby?
Well, blessed to have an 8-year-old daughter who keeps me fresh, keeps me
That'll
on
help
my
you.
toes. Yeah, chasing after her It's been a lot of fun, and watching her kind of pick up new sports this summer, like golf. She got into learning
Oh,
golf as well as into tennis, and of course swimming, and all those activities. So it's keeping me active too, and seeing the world through fresh eyes is really
8
uh,
is a fun age too. 8
it
is a
is
good
good.
age.
Yeah, it's really been a lot of fun. So and basically, yeah, you have to unwind with kind of some leisure reading, some leisure time, and basically just really the occasional uh, binge TV show or whatever. But basically, yeah, for the most part, it's just kind of just recharging and kind of coming back fresh. Plenty of sleep, plenty of exercise. Really those kind of things. They seem so basic and almost like kind of like, well, sure, everybody should do that, but yet we don't want to binge a TV show until 4 in the morning and have to come in a few hours later to get ready to trade the markets, right? We want to be fresh so that we are ready to take action and keep our minds alert. I mean, that's, I guess, the big thing, Jeff, that I've learned through this whole thing is that we've got to keep our minds alert, active, and healthy so we can
Mhm.
be in this game for the long haul, right? If you
Yeah.
have your otherwise physical health, but then you don't have your mental health, if you endure something where you can't then know what you should trade, you can't remember what you should be trading or doing. That's to me the thing I want to try to stave off as long as possible, so
Yeah.
that you can
Well,
still have that mental acuity to make the right decisions and basically profit from a lot of years of experience, right? So that's where keeping mentally and physically sharp has become even more of a priority
I'd
for
also
me.
say that it's good to take a break if you need to. Like if there's something going on in your life that you just can't focus on it,
Very
don't.
true. Yeah, never trade through when you're going through some personal stress, whether it was in your health, relationship, other any of that kind of stuff. It's like it's definitely better to take a break from trading because basically it'll almost seem like that the trading is exacerbating your stress if you're not haven't kind of cleared the decks on those other fronts first. So yeah, absolutely, taking a break can be very valuable or even mandatory in times of obvious stress or you just need to take care of some other things first before you get back into the market.
Price. Thank you for coming and spending some
So
time with
fun.
us.
Thank you,
Big,
Jeff. Always a pleasure. The time flies when I'm with you.
bigtrends.com is the best place to get a hold of Bryce. Great. I want to say this real quick. Thank you for all of the help over the years, the support,
Oh,
the
thank you.
knowledge. You've been very, very giving over the years, and it's been great. And I appreciate you on a personal level,
Well,
as well as
thank
a
you. I appreciate
professional.
our friendship and appreciate everybody at MetaStock. They've done a great job helping us to codify these concepts into something that you can then make work for you as well, folks.
All right, cool. Thank you very much, Price.
Thank you, Jeff.
Bigtrends.com, everybody. Thanks for coming. See you again soon.
Take care.